Hello guys. Today I think I am on time and it's very good to be here with you guys. So I will be just waiting for a few minutes until the guys come, and then we can begin our subject, which is swing trading strategies, or what we call short-term trading. And we see how people think about these swing trading strategies. Okay, so today is Saturday as usual. It's 11 o'clock and we will begin our session speaking about swing trading strategies. So as you can see, I was following these 2 or 3 weeks the whole market and just give you a lot of information on how this market works. Okay, there are what we call big indexes, and what they do, we have small industries indexes, and we have a lot of indexes that the people watch in order to see where the market is going, and is there opportunities to buy long or to short the market. And this is what's the main thing, is not just to follow what we call the indexes, but to follow stocks, because a lot of people hello Wiseman, how are you? Good evening. Today I have been I have been early. Okay. I have been on time. I think I was waiting for you guys. So I will be just waiting some few minutes until all the guys come in order to begin our discussion, especially of the week. Hello Michael Martin, thank you for coming. Tramp D, thank you for coming. Albos Sadijian, how are you? Thank you very much, Albos. He say, I started following your training, man. You seem very smart. Thank you very much. You will see in the future that my training is almostly based on price. Now, a lot of people, they don't understand this this thing, because they begin to watch a lot, and this is one of the main problems that will make you problems when you are trading. Okay, because when you watch TV, a lot of TV, they influence you. Okay, even though you say I am not influenced, but because this is the power of the media, is to change the opinion of people. Okay, so when they change the people opinion, 100% it is in their favor, not the public favor, because most of the time the public, it means us. Public, it means the people who don't understand what's going on in the market. This is what we mean by the public, or the people, or they say the crowd. Okay, the crowd, it means people who just follow, and they become experts in what the analysts say. In other words, they scam themselves by themselves. It means they take the lie, they believe it, and they even defend it. Okay, that's why some people when they say, for example, this stock or this company, the analysts say, for example, sell. So all the other people, they believe in what they say and begin to sell. So here we have Trump, we have question. IPO biotechs are good. You showed one, almost double in price. Now, which IPO are you speaking about, Trump? You say you showed one almost double in price. Are you speaking about my past videos? It could be Anak, not Anab. Anak. It's A. Let's see. It's ANAC. I still remember it from 78 to 135. This is what you are talking about. Yes, it's called Anak. So let's go. I don't know if Trump, you are speaking about the past, but I don't know right now. I have no idea about the. Let's go to the chart. I don't know if you are. Oh, there is no. Maybe it is it. Oh, maybe the stock has been deleted or it has been sold. This company, maybe it has been sold. It has been sold. Oh, it's called ANAP. Let me see. Let me see this ANAP. Oh no, it's not this. This stock I have not this stock in my videos. No, the other one is Anak. I think it has been sold. Let me see. Let me see in the. I don't know. This company, I think it has been sold. Ah, yes. This company, I think it has been sold, and now it is I think it is a private, because there is no this company doesn't exist anymore. Okay, let's just go. As biotechnology company is focused on discovering. I think this company has been sold to another company. Yes, it doesn't exist anymore. Yes, this is what I have known. Okay. So let's go back. Let's go back to what we say. Yes. See, Trump. This ANAP, as you showed this stock. I didn't make a video about it. I make a video about another stock called Anak, ANAC, and I think it was sold. It was sold, and another company owns it right now. But what do you say, Anab and Soros bought it? And Soros bought it, it means when he bought it, it could be a long time ago, because they don't, you know, Soros is a hedge fund manager. If he buys something, it will not show until a few months after later, because he bought a lot. It could be 10% or 50% or 100%, I don't know. So what you show is something that I didn't buy. I didn't buy this ANAB. Where do you find it? It's not in my channel. Okay. So let's go back to what we are speaking about. Albor said, so I look at average analyst's target for stocks. Are you saying it's worthless? Oh yes. See. Sorry, I think there is a disconnection. I think there is a disconnection, but now it's I think it's very good. Now let's go to the question of Albor's, and he is saying, so I look at average analyst's target for stocks. Are you saying it's worthless? Now I will show you. Now, if you find analysts that say buy this stock, recommendation, others they say hold for those who have this stock, and the others they say, for example, sell. Or there are some people who are neutral, they don't say nothing about this stock. Okay, this is just an opinion. Okay, so for you, if they say hold or sell or buy, for me, it doesn't mean nothing. Now, why? Because I don't trade because of their advice. So, if you are going to follow my strategies, it means my training, forget about this analyst's opinions. Okay? I have explained many times that analysts, there are people who are paid to give their opinion. Okay, so why they give their opinion? It is because they are paid. If they are not paid, they will not give their opinion, and their opinion is based on what other people are asking. Okay, so for example, if you find a mutual fund that it is not doing so good. Okay, no one knows it, it's not doing so good, and the trend has been going down for long. They try to advertise. Okay, this advertise is to bring people who don't know the market, okay, and ask them to buy something that no one buys. So if you are going, since you say that you are begin to following my training, so Albor's, I don't use analysts in my training. It means you can watch TV as you like, but if you take advice from TV, believe me, I'm not saying you will not make money, but you will understand nothing, because each time, like the market, when you see the market right now, some people they buy, they say to them, oh, the year is good, just buy stocks. Some they say no. Short the stocks because the year will be bad. It's just opinions. For us, for me, we buy from a momentum, from exact time to buy. We follow the stock if it goes up to a trend, and then we make money, and then we exit. We don't follow analysis. So try to make sure you understand from the beginning what I am doing. Now, someone said Spotify IPO is coming soon. Tamba, Nair. Now, understand that IPOs, most of the day, most of the week, most of the year, we have IPOs. IPOs are just companies that are coming to the market They get listed if they are successful. If they are successful, it means they continue into the stock market and the market give them their price. Okay? If they like the company and we have a lot of people buying, so the stock will go so high, so good. And if the market is too bad for them, so a lot of people become to sell them, to sell short. And then if the media is against them, this is the problem. Okay, the media changes the opinion of the people. That's why at the beginning, if you can remember, Facebook at the beginning, okay, they give Facebook a bad opinion. They say Facebook is not good. If you go back to 2012, when I say Facebook could be a competitor to Google, no one believes it. For me, it is just an opinion, but an opinion because of the business itself, how it works. But the prices have been going up, and then the media has changed, because the media follows also the price and give you information. Now, Trump said, what do you mean by strong, stable company? No, for me, when we say strong, stable company, it means this is in investing. Okay, not for me, because I don't see. For me, I don't follow what we call strong, stable company. I don't follow them. Okay, but what I follow is the price. Is what I see a move in the price. I follow this price, and this is why my strategies work, because it works with the price. If, for example, if a stock is going up and analysts say, oh, this company is not good, sell. Okay, I'm looking at this company, and this company is doing good. So why I exit? Why I sell a good investment or a good trend? I will not sell because some people say to me, sell, because they know better. No one knows better than us, who are the market, because it's us who move the thing. You know, you, mutual funds, hedge funds, anyone in the market, if we buy something too much, it will go up. That's the thing. Now, Albor said, seems you follow social media stock like Facebook or Twitter. Do you have any opinion on Snapchat? No. See, Albors, maybe you have misunderstood me. I don't follow social media stocks like Facebook or Twitter. No. For me, I trade every stocks, tech stocks, technology stocks, drug stocks, any other company that it is into a trend, I follow it. But I try always to find the stocks that can move fast. These stocks that move fast, you will find them everywhere. Electronics, when there is a move, you find stocks. For example, energy stocks, if you find some stock that move very good, yes, it means any good healthy stock, I will buy it. It has nothing to do with sectors, but there are some sectors that I don't like too much. For example, insurance, banking, stocks, and the other, I don't go that much to those because they are slow, and I can't feel the stock when it is slow. Okay, a stock that moves that it is $50 and a day, $50 as a price, but it moves like 10 cents or 15 cents. Those stocks, I don't buy them. Why? Because they are slow. For me, they are slow. You can buy them for yourself. It's okay. Now, so you ask me, do you have any opinion on Snapchat? Okay, let's go and see Snapchat. So because you spoke about it, let's see. I think Snapchat is a snap, right? Oh, okay. Now, as you can see, Snapchat has been going up a little bit at the beginning. It's an IPO, which means it's a new company. Let me see if Snapchat stock. Let me see here. Yes. So, as you can see, if we go to Snapchat, the stock has been going down. We have a gap down here, as you can see, and we have gap down here, and then we have a gap up, a very good gap up here. Okay, now this here, it's going down. It has nothing to do with the market, so Snapchat doesn't follow too much the market. But since this gap up 21, 22, it's going down. So it is like a new company, and we will never know where it goes until analysts say good about the company. Okay. Now, why I say why I always say if the analysts say good things, because analysts, they influence the people. If analysts right now say don't buy a Snapchat, just an example, okay? Most of the people, they neglect it, and they don't buy it when it is with a lower price, okay? But when they say buy it, it means the stock will be so high because the mutual funds have already bought 1 year or 2 years ago or 3 years ago, and you come at the end just for them to, they make profit from you, because when you buy and the other people buy, the stock will be going up and up and up. So the mutual funds are making more money than you guys. So for me, when I buy something, as what do you say? Yes, Albors. Since you are new here, in our chat and in the training, we don't buy because the analysts say buy, or you have what you think, you say the average. What do you mean by average analyst? There are hundreds of analysts, and each day we have a new analyst. What is this new average that you get? Okay, so you are just you base your training, you base your stock picks. It means how do you pick the stocks for the long run? You base it for what the opinion is with what we call analysis, and this is bad. Okay, so for me, for example, when I buy a stock, I don't buy because of the analysis or because of the economy of the company, that it is good and stable and strong. You can have a company that it is strong, it is stable, it has 100 years, but the stocks is going down. So for me, the price is the first thing I look at, is the price, and I buy a company for the trend. It is because of the price. I don't buy because of the company, if it is competitive or it is good or it is whatever. Okay, so let's see what the other people are saying. So Trump said, 30% of volume coming from ETF, which way to go during volatile correction. What is this volume that you are talking about, ETF? Okay, volume has nothing to do, you know, volume is traded, bought or sold, okay, in a day. So from where do you get this idea? It means you get this idea because someone else is looking at this statistics, and he wants to give you an idea about this. Okay, so there are some stocks that have very, very high volume, and there are some stocks that are haunted. No one goes to them. Do you know the reason? It's just traders. It's like us where we want to go. For example, a day trader. If a stock is very, very known, you find a lot of traders there. Okay, Facebook, Twitter, and Apple, and some stocks, you will find millions and millions of shares traded a day because they like trading, because there are a lot of people. When there are a lot of people, there is a lot of what we call a lot of movement in the stock, and day traders, they like this. If the stock is strong in the day, they buy long. If the stock is not doing good in the day and it's going down, they short it. And this is how do they make their money. Okay, so here they don't care about the trend like we do, and in general excuse me, they don't care about investors, what the investors say, who are buying for a long time, because investors also, they don't care about day traders, what they do. So you see, anyone is in his small world. Day traders, they look at the day prices, whatever is going on, either going up or going down. So they do what they think the direction, and the direction gives them money. It's the same as us. We look for the trend. If the stock stays 2 weeks, 1 month, 2 months, 6 months, 7 months, okay, and when the stock stays very long and the stock is going up, we don't care about day traders, what they do. They short it one day, they go long the other day. We don't care, because we see the trend. It means there is someone who is big. There are a lot of people who are big. There are a lot of swing traders, they come, so the stock will go up heavily, and by day a lot of swing traders, they make money. And okay, Wiseman said, the market is illogical, so for swing trading, it's pointless to look at the company fundamentals. Yes, this is true. This is true. If you are looking for the company fundamentals, you should do investing. This is very important to understand. Investing, they don't look at what swing traders, what day traders do. These fluctuations, they don't see that much. What they think is, if this company can grow faster compared to the other companies in the same industry, okay, and they think if the company is doing good, a lot of mutual funds, a lot of people will buy it through the years, and the stock will be going up. This is true, okay, but not true for all the stocks. Okay, so not all, but it depends where you are. And this is what we call investing or trading or swing trading. It is where you are at the same time. For example, if it is a bad year in the whole market, and this is the year that you begin trading, wherever you buy something, it goes down. Wherever you buy, so that year you will be losing a lot of money if you don't know how to short the whole market, if you don't know how to sell short, if you don't know how to use puts, options. It means all this stuff, if you don't know them, in a bad year, you will be losing a lot of money. So it depends if you understand what's going on in the market, yes or no. So as I told you, for swing traders, or what we call short-term traders, and for day traders, and for investors, each one is another world. It means they have criteria that it is so different from each other. So this criteria, you should understand them, and you should differentiate, and you should see yourself. Are you going to be a day trader, a swing trader, or to be an investor? Okay, so here it depends on your psychology, it depends on what you like, it depends on time availability. For example, day traders, if you are doing stocks, you should be in the morning. You should be free in the morning. But if you are doing, for example, forex, you are doing futures, you don't need to be in the morning, because it's 24 hours and you can trade at any time, depending on your training and strategies. Okay, so the good thing about other things like swing trading or short-term trading, you don't need to watch stocks each minute or each 10 minutes or each 1 hour. When you buy, we look only in one day. Okay, only in one day. At the end of the day, we see what's going on. We see if there is earning news or there is no, because it's very, very vital when you buy a stock. And I have answered a lot of questions about that, about if there is earning news, what do you do? So I always try to help you guys understand what's going on in terms of price in the stock market, and to understand that the media is influencing you and me and the other people if you follow them. Now, if you are following them, you are watching a lot of this. Well, when they say, for example, I'm going to give you an example. If they say, for example, today, oh, there is a gap up, it means the price jump very good for a company. Now, if they say this information, is it good for you, yes or no? This information is worthless. Now, why? Because you are not in the trade. You are not making any money. They just give you they give you the information. Now, whenever you go to online, you find that each day we have a lot of gap ups in the market. Now, at the same time, if you go to other stocks, you find a lot of gap downs. It means the stock has been going down so bad because of the earnings. So all this information is useless for you. Now, if you were in one stock and you make money, that is just an entertainment. Because, for example, with Twitter, I was in with Twitter and he has a gap up, although the market was going down. So how to buy stocks has nothing to do with the general mood of the market, because the stocks, they are not the same. Some stocks are going up for long, some stocks are going down for long. So you should know where you are in order to make money in the market. And this is what is the good thing about following the price. It means you are following something that it is true, that you see it, and the price never lies. If you see that a stock is going down for a long time, it means there is something wrong, because the people, they don't see like it is alarming thing. They see, oh, it will be going up. There is no guarantee in the stock market that a stock will go up, although it is a big company. Okay, there is no guarantee. So why you are following people and as if there is a guarantee in the market that the stock will go up? Trump said, Snapchat is pump and dump, and it's not at all time high. Now, understand. Well, what you see, for example, for a gap up in Snapchat, it might be because of the earnings are good. Okay, so this has nothing to do with the company itself. It's just the reaction of the traders toward the news. That's why we have gap up and gap down. And as you might know, these kind of stocks that it is very famous in social media, a lot of people, they know, and they buy, they sell according to what the people say. So it's not a pump and dump scheme. No, pump and dump scheme is done to a stock that most of the time not known. Okay, so Trump, I want just to tell you something by experience. The people who are doing scams in the market, they don't do it with big stocks because they can't control it. Okay, so I don't know this Snapchat. Oh, okay, Snapchat. Let's say on Friday, 31 million shares traded a day is a big thing. No small guys who want to do scams in the market, they can go to Snapchat. No. Snapchat, Twitter, Facebook, Apple. No, there is no what we call pump and dump scheme. Pump and dump scheme always goes to penny stocks that are not known. This stock, it is, for example, trading for $2, and the volume is only 50k or 20k or 5k or whatever. No one knows about it, and it is trading always in low prices. But one day, this $2, you see it $10, and you see the volume from, for example, 10k or 20k. It goes, for example, to $5. I just give you. I think I have given you an example before, but let's give you here an example. So, as I told you, okay. So let's say here is the stock. Okay, the stock is moving like this. See. Now, let's say it is between $2.15 and $2.01. This is how this stock moves each day. This is how it moves. This just showed you how it moves. So, and let's say the volume. Okay, the volume, let's say it is 10k. It means 10,000 traded a day. Now, 10,000, what does it mean, 10,000? Or 50,000? Okay, or zero, sometimes you find zero. It means this stock has not, there is no shares bought or sold. This is low volume, okay? Just to make sure you understand. So the volume is very low. Now, one day, okay, you see a big candlestick like this, green, okay, and the stock, I give you just an example. Let's say it is $10. Now the volume here is 5 million shares traded in that day, in this day. Now the question is, why this stock is always 10 or 20 or 50k or 0k? It means it has a low volume, and in this day it is 5 million shares traded a day, and the stock is $10. Now, after most of the time, the stock will go down in few days or in one day, okay? And now it is, let's say, it is $3.10. And then it continues to go down to reach, and it continues doing the same thing as before, like this. So this is what we call a pump and dump scheme. Pump and dump scheme. Because the reasons for going up or going down, no one knows. Okay? So they pump it and then they dump it. And this doesn't work with Facebook, for example. Do you see Facebook from 175? It goes to, let's say, to $1,000 in a day. Okay? You don't see that in Facebook, for example. Why? It's just because Facebook is too big, and it is well known, and we have millions of shares a day. So no one comes to this Facebook and try to do pump and dump scheme. But you find the XYZ, and it is a new stock in the stock market. Let's say it has 6 months, this stock in the stock market, and it is not known. No one knows this kind of stock. Okay, no one knows this stock. That's why they can make manipulations. And I have explained before the idea of manipulation. So manipulation always comes to unknown stocks. Unknown. So for example, Snapchat is known stock, and it has 30 million volume. No one can come to Snapchat and play with it. Okay, so just to make sure you understand this idea, just to let you know how things work. This kind of manipulation I have explained in many videos, and I give you examples from the market, how it works. So I will just go again. I will just go to let's say to the chart. Okay, now if you go to let's say drugs, you go down to the list price. This stock has been sold. Okay, let's give you an example. Now all this is small here candlesticks are kind of manipulation always, but let me find you a big manipulation thing, like this one, but this is long. Okay, so the prices have been going so long, it's like a pyramid. It's going up, then it's going down. Okay, so always, yes. Okay, let's give you this example because it's clean. Okay, so you see, I'll give you this example to show you. Okay, now here the volume is 1,300,000, but here it is 39 million. But this it could be earning news or so. So I'm not sure about this earnings. If it is earning, it's okay. It's not manipulation because it is just what we call reaction of the traders to the thing. Okay. If it is earnings, if this company is making good earnings, and you see this, it's okay. Now let's see other. Oh, okay. This one you see here, this here. Okay, from 14 it goes to 18, and it's not because of it is when we say penny stocks. It could be a big stock and they play with it because this was big, and now it is a small. So you see here, so they push it up, they push it up, they put it down. This is how things work. Stocks are always manipulated when they are small, okay? When they are small, they are manipulated, but when they are big, there is no other things they do, okay? So, for you guys, especially for those who always try to say, for example, oh, we want to invest in penny stocks. I say this is a big subject. Okay, there are just a few penny stocks that they succeed to become good companies. Just few, but almost all of them, as I showed you just right now, all are going down. Why? Because I'm telling you something that I have told you before, but I will try to repeat it again and again. Maybe you have heard about some people who are very famous and they have done this kind of thing. These, like, I know that most of you know him, like Robert Kiyosaki. Maybe you know him. He is one of the guys who was doing, and other people, not just alone him, but a lot of people, what they do. Okay, so this is not manipulation, but this is just they do some investment that make them rich. Okay, but if you want to do that, you should have money first. Okay, so you can't do that when you are poor. Now, this thing, I will show you just an example. Okay, let's see, I guess, an example. Okay, now, as you might know, we have what you call a private company. It means private company, and then it becomes public. Okay, most of you guys, if you want to buy, for example, public, let's say Facebook. Now you like Facebook, you go to a market, or Twitter, or Snapchat, let's say Snapchat or Twitter, or any stock that you like, or Google or whatever. Now you can buy shares, or it's because it is public. Now when it is private company, now you can't buy these companies or you buy shares because the owners, they don't let you. The owners or the shareholders, they don't like that you buy their some part of the company. Now let's say you see a restaurant, okay, a restaurant, and this guy who is the owner or the owners of this restaurant, it's a big restaurant, but it is successful. Okay, it is successful, and you go to this owner or these owners, and you say to them, okay, your company is doing so good, your restaurant is so good, there are thousands of people coming, and you are making thousands and hundreds of thousands of dollars. Can I buy part of your company? Most of the private companies, they don't like, okay, because they are successful. They don't want someone who is not having that much money. Now, what did happen is that some people, they come, and before it goes to becoming public, they buy, let's say they buy half, 50% of this company. Now this company, let's say it is worth $1 million. $1 million, this is how is the worth of this company. So with 500K, he can buy this half of this restaurant. He buys just half of it, 50%. Now, if it goes to the market, let's say the stock is $1 when you buy it, but let's say in the stock market they sold it for $20. Now, if you buy 500K, okay, with shares. Now from 1 it goes to 20. How much you make, you should multiply this 500 by 2. So you invest 500K and then you have $10 million the next day when it becomes public. So you see how people, how they make money. And these things they don't teach, because you are poor and you can't make it. That's why some people, they teach things that you should have money first to do it. 500 or 1 million or 5 million. Now, if you have no money, private companies, they don't do business with you. Now, since we are all here, the public, it means people, almost of the people, you can't go and buy 50% of Facebook or Snapchat or Twitter at the beginning. You can't, because you don't have money. So you see, so you understand how things work. It means if you you have money, you have an advantage in everything. Okay, an advantage. So we are not equal in the market. How do we? I give you just I just give you this example, and then I go to the questions that you have. So bear with me. Now I give you an example. Okay. An example, let's say you want to buy a house. Now, what's the difference between you here, you have no money, okay? No money. And there is a rich person, and he has money. Okay? He has money. So you buy the house, let's say $200,000, and the rich bought it with $200,000. This is the beginning. But you, because you don't have money, they put you, let's say, 5% interest rate, and this house, you end up after 30 years, just an example, okay? After 30 years, okay, 30 years, you will pay $450,000 for this house, although it is only 200. Now the rich, he bought it with 200, and let's say he has a rent with $1,500 a month. Okay, this is just an example. So what happened is that the rich he bought it cheap. He bought it cheap, although it is the market price, but he bought it cheap because he will make an investment, and he will begin making money, or what we call passive income. Okay, passive income. He will make passive income, and he will be making money from the first day. He just rented, so he rented to someone else, and he began making money. Now you here, you are living in this company, in this house, so you don't rent, and then you should pay $450,000. That's why the rich always become richer. Okay, always become richer. It's just because of the advantage. They have money. You don't have money, so you always is at disadvantage. This is the difference. Okay, so let's go right now. Let's drink some coffee and go to some questions. So I will go to your questions. So try to be always patient. Now I have another question with Buy-in 8. He says, how many stocks is it good to buy at one time? Now this depends on how is big your account. If you have 100,000, it's not the same as when you have $5,000. Okay, and there are a lot of things, but I give you a rule. Buying, I think buying 8, you are new here. I haven't seen you before, but you are welcome here to come each Saturday at 11 o'clock to answer your questions. So, how many stocks is it to buy at one time? Now, I will show you my way. Maybe you can do the same as me if you are going to follow my strategies. Okay, so buying, I will answer your question right now, and I will show you how things work for me. Okay, so just I give you an example. Let's say you have 10K. Let's say you divide it on 5 positions. Now, 5 positions, when you say 5 stocks or 5 positions, okay, 5 stocks, it means when you say position, it means the stocks. If it is 5 position, it means you spend $2,500. Oh, no, you spend $2,000, excuse me. Let's take this from the thing. I am thinking about 4. So $2,000 is you buy a stock. Now you have how many positions? You have 1, 2, 3, 4, 5 stocks. Now, when you buy, either it is you buy all of them at the same time, or you buy them through the days. It's not important. What is important is just you allocate $2,000 for each position. Now here, let's say you bought all the stocks in one day. Okay, let's say these stocks are okay, X, Y, Z, MTS, E, F, D. Just okay, this is just fictitious stocks. Okay, I don't know if they exist or no. O, S, S, D, M, S. Okay, let's say you buy all these stocks. Now, if the stock is good, it goes up, you hold it for more, and this we have techniques to hold and to see. Now, if this stock is bad, then this stock is good, this stock's good. Now this you hold because it's good. You can stay many days or many weeks or many months. Now these two are bad. What do? Since maybe you exit with a stop loss, what you should do later, you should replace them. Buy another one. Buy here, it means you replace them. This is what I do in my account. Okay, this is what I do in my account. So the rule for this, I give you the rule. The more positions, the less risk. This is the general rule. I will give it to you. Okay. So the rule is of this positions is the more stocks in your account, the more stocks, the less risk. Just take this rule and you can apply it into your thing. The more stocks, the less risk. It means it's like a mutual fund. See, mutual fund, what they do. Let's say a mutual fund, they don't buy one stock. They buy collection of stocks, a lot of stocks from different things, and the average is the price. This is their price. So we are doing like a mutual fund, or like so the more stocks, the less risk. This is the general idea that I have for you guys. For you guys who have been following me, you can go to training level 8, how to minimize risk and maximize profits. We have all explained and why we use this into details. Now let's go and see what the other are saying. Okay, there are a lot of things I haven't seen. Okay, so Spoonbank, aka Spoonbank, says, "Sir, what do you mean by volatile stock and a liquid stock?" Okay, so volatile and liquid, two terms that we use. So let me explain. Okay, so volatile, okay, and liquid stock. Okay, liquid stock. Now volatile, we mean how the stock moves. For example, a stock was here, the price is $20, the next day it goes to 26, and then the other day from 26, okay, from 26 it goes to 19. Now if you see this stock, you find that this stock movement is very volatile. It means it moves so fast. Okay? Now, this is what we mean by volatile. It means the stock moves so fast, either up or down. It's just something. Now, liquid, it means, we mean by the volume. Volume, for example, liquid, let's say 5 million a day is liquid. Now 2,000 a day is low volume. Okay, low volume. Understand that this liquid or not liquid, it has a relation with the bid and the ask. You should try to see the bid and the ask. The more the spread, you understand that the volume is low. Let's say the stock here is $20. The bid, the ask is $22. So we have $2 spread. This is a very low volume stock. So understand, if you buy right now by 22, if you want to sell, you sell by 20. So you lose $2, and this goes to the market maker. I have made videos about this before. The market makers, how do they make their money? Okay, so this is what we mean by liquid and volatile. So let's go to other questions. So hope AK, hope you understand these two terms that we use. Another question. AK said, is trading stocks for good for living? Now, this idea about to live from stocks, okay, first you should have money. A lot of people they are concerned with how to make money, but they are not concerned with the capital they have. They want to have a very small account and making a lot of money from it. This is, I'm not saying it is impossible, but it is very dangerous for you. For example, you have $10,000, you want to do day trading, and then you quit your job and you think that you can live with $10,000 a month. You can live from it. Okay? So this is not a good idea to have in your mind. The good idea is, if you want to be a professional trader, if you are going to do what we call if you are going to do a living, first you should think to make your account bigger and try to trade, for example, either to be a day trader or to be a swing trader, okay, or even an investor in the future. But the main thing I will show you here, okay, in the paint, in the explanation, I will show you, okay. So trading for living, just to give you an idea, okay, so 10K or 100K or $1 million, just an example, okay, okay. So what do you think the percentage you can get in order to make a living? Okay, so understand that those guys who have made $1 million, okay, 100K or 10K, the difference, who is at advantage, who is now, this one is at advantage. He has a big advantage because he has a lot of money. He can put some investment, long investment. He can do swing trading and he can do day trading because he has money. Now this 100K, it's average. Now 10K is low. Okay, who is the best one? Who is the best one? If you can make, this is the best one, this is the second, this is the third. The less money you have, the less chance to live from your trades. Okay? And most of the people, most of the beginners, they want to take 3 and to live like this guy, someone who has 10K and he wants to live that 10K. So here your chances are very low because your money is small. Your money is small and you are going to do most of the time to do penny stocks, which is volatile, lot of volatility, okay, a lot of risk. You have small money and you are doing high risk. This is why trading for a living for you is not a good idea. You have high risk. Okay, high risk. But this guy who has $1 million, he can invest some stocks, he can do swing trading, he can do day trading, he can do whatever he wants because he has a lot of money and all his money will be working for him. Long investment for many years, it goes up like stocks. If he has companies, he bought indexes or whatever, is going up for many years. He swing trade following the trends, and he can do even day trading if he has time. In the morning, he can make more money also, and he has money. So please, when you are thinking to do like to trade for a living, think about your money first. Now, this is number 1. Think about the money account. Now, what is the second thing you should think about it? Now, B, the second thing is practice. Okay? Practice, and you should have a solid training. Whatever. Solid training, it means you know what you are doing and you can have what we call consistency. Consistency, it means, what does it mean? It means for many years you make money. This is consistency. Many years you make money. You can't do that without practice. Okay? So you should practice. You should have a solid training and consistency in making money. Many years. And then you can decide to become a trader. okay, or investor. You decide. Now, when you decide, the first problem that comes to you is what? Is money. Do you have money? Yes or no? That's why I told you my opinion is always about your account. Forget about now. Now, let's say you have 10K or 5K or 1K, whatever is money you have. Now, in your account, you should save more money from your jobs or save more money and make your account bigger. Okay? When your account is bigger, you can trade whatever stocks you like. Stocks, you can do options, you can do day trading, you can do whatever you want. And you are at ease. Okay? You are at ease because you have a big account. But when you are a smaller account and you want to become trader, you should think about making your account bigger and bigger and bigger. I don't say to you how much bigger. The bigger, the better. Okay? So the bigger and the better for you. Now I will give you this could be the lifetime, okay? Your lifetime making your account bigger. You begin with 10,000 in 2018, but in 2040, let's say if you are still alive, this account, let's say it is 200K. So you have been making a lot of saving and a lot of push to your account, okay? It depends. This is just an example. It could be 500, it could be 1 million, depending on what jobs you are doing and how much money you can save. So saving is a big deal. All the people who save, they will retire at ease. But the people who eat or who spend what they have, they will never make it, which is very hard. Okay? So this is one thing that I should make to AK Shubhang. Hope he understands what we are doing. Prince Singh, how are you? I am fine, very, very good. Let's go to the other questions. Albors Sajidian, he said, I am curious, are you planning to be a mutual fund or hedge manager? No, not for now. Not for now, because when you are a mutual fund manager, you should work for a broker. A hedge fund, it has a lot of things to go with license, to get with a license and to follow things. And I prefer to be making my money myself and to teach my ways to other people than to let them rely on someone else. Okay? So Prince say, sir, in India, most of the time it happens when any company results came good, but the next day stock price come down. Is it happen in your stock market, and why? So I don't think in India it's always what you say. If we have what we call gap up or gap down, I don't know the regulations in your market. Okay? Here in America, the stock can go up and down, whatever the traders decide. So for you, Prince, the gap up or gap down, how much is by percentage? In America here, it could be unlimited percentage. A stock is $1, it can go to $20 in a day. So no one will stop it, because here we have what we call a free market. But I will tell you something. I don't think that in India all the stocks who have good companies tomorrow they will go down. This depends on what the traders think. Okay, so I will give you an example to show you this. Okay, so let's say a company X is called XYZ, just company. The stock, let's say it is $100. Okay. Now after 4 p.m. there is the what we call the earnings. Earnings, it means the company announces the earnings compared to last year. Now let's say the price is 100. Now after the market close, sometimes, but don't take it as a rule. This is the problem. Rule. There is no rule. Understand that. It's not, you don't say because there is good earnings for this company, it means the stock will go from 100 to $110. So there is no rule here. Now who makes 100 to go to 110? Who? They are traders. Okay? Traders' opinion. Now they think that the company is doing good, so they buy after 4 p.m. and they begin to buy from 100, 101, 102, 3, 4, 5, 6 until it goes to 10 in the next morning. And next morning, it means the open, let's say it is 110. But even if it is 110, some people who are short sellers put this 110 down, let's say, to when $100.05. So here we have traders who push the stock up. Some other traders, they do selling short, and they push it down. They sell these shares to put down. So it depends on what the market is doing. Now for you, understand one thing. There is no rule. So don't put rules to the market. Oh, you say to the market, oh, it is a good earning, the stock should or must go up. This is not a rule. You should not do a rule for the market. The market is done by traders' opinion, what they think. It's not you, what you think. What you think is not that important. What the company say, if it is good earnings or bad earnings, it is not their problem, because the company, it's not the company who makes the stock goes up because of the good news. It's the traders. So understand this idea of traders. Now you, for example, you like a company and it's always doing good things, and you want to make a rule that each earning you will make money from it. This is not true, and stop thinking like this, because the market doesn't work like either in India or in Japan or in Europe. It's the same thing. Okay, there is no rule. There is no rule, so don't put rules to this stuff, because you just, or if someone tells you that he knows, there is no way to know. No way to know, because you don't control what the traders are doing. Maybe there is good news, but analysts say that these are not good earnings, and they are bad. So the traders maybe take the opinion of the analyst and they short it. So in the morning you find it not 100, but you find it $95. Okay? It goes down, although the company news earnings are good. So stop making rules. Now, if you tell me, how do you trade this? So I will tell you how I trade this. Okay, let's say you buy 100. Okay, after 4 p.m. there is the news. Now for you can have many ways to think. Now you know that after 4 you have a stock that it is $100. You bought let's say you bought 100 shares. So 100 shares, you bought them before the market or before. You have many ways. Now, the first one, if you are scared about the market, if you are scared, you think maybe the stock will go down because of bad news. If you are scared, sell all your shares. And don't be into the earning time. Earning day, you should not be in the earning day news. Or there is another thing, sell half. Sell half. Why you sell half? Is just to reduce the risk. Reduce the risk. Okay? Or stay and assume the risk. Assume the risk. Now, it's up to you what you want to do. Now here, you are free to do whatever you want to do. No one will ask you to do whatever. Not your broker, not your friend, not an analyst. So you should decide by yourself. This is your decision. Decide. Hope this explanation will give you a good idea. So let's see. Hi to Balkane. Assalamu alaikum. How are you? You come late. You should come early. I still remember Tubal from, I think, Saudi Arabia. Okay. Pierre Herzog, thank you for coming, Pierre. How are you again? Thank you for coming and for joining the session. James Armstrong, hello. Armstrong. When I see Armstrong, I thought about the pilot, you know, in the past, you know, who goes to the moon, as they say. Okay, let's see other questions. Pierre said, in some stocks, I see that the market moves just before the earnings. Do you think it's because of a leak of information? No. Pierre, I have just explained just few minutes ago how the earning work. The earning, how does it work? It means when the company yes, as Wiseman said, Pierre, I think some people like the risk of buying on earning. But for me, see, I will just explain to you, Pierre, this idea, because you say, do you think it is a leak of information? No, it's not a leak of information. It's the company announces. You can be there and you listen. Okay? So let's I would know let's see, I will do something for you. Earnings calendar. Earnings calendar. You have 49. Let's go and show you something. Okay, look at this here, please. I'm speaking to Pierre, who is looking for this kind of information. Now, this is Yahoo earnings calendar for all the stocks. Let's say on the 5th March, okay? Okay? 2nd, 3rd, 4th. Yes, 5th March. It is on Monday. Now it is easy to know this. Please see with me. I will explain to you. Now, for example, after market close, what does it mean? it means that in this day, which is Monday, when the market closes, the company which is called adhere Home Care Corp will announce, okay, will announce the information about the company quarter, okay, compared to the quarter of last year. Now, what is the EPS, earning per share? It's 44 cents. It means the analysts say that it could be the earnings for each share, it could be 44 cents. Now, what did happen? If they say that this company says that the earnings is 50 cents or $1, maybe we will have a gap up. But if it says 43 or 42, you know, the market can go down for the others, and it can go down. And see, some companies are very known. They put the analysts, they say what is their what they think. But some stocks, they are not known, they are not interested in, they don't give any information, and there is no gap up or gap down for this. Okay. So as now this 49 earnings just on Monday. Tuesday 61 earnings. 7 March 66. 8 March 82 earnings. It means earnings are each day. You can't buy all these stocks, and you will never know if they are good or they are. Now see here, for example. Here in the second one, ADVM, it says minus 33 cents. It means that the company will lose 33 cents for each share. Why? Because this company is not doing good. Now here it says time not supplied. It means this company in Monday, it can do it before the market open, or during the market open, or after the market open. I will just give you, okay, something here just to make sure you understand. And I am always here to, so XYZ, this is the company. Now if it says not supplied, what does it mean? It means it could be before the market open, or during the market, or after the market. The announcement, it means the announcement. Before, it means before 9:30, and during, it means from 9:30 to 4 p.m. This is the day, the trading day. And after the market close, it means after 4 p.m. So this is one not specified. The company doesn't want to give a time where they give their announcement. And when they give their announcement, it is not leaking information. No, it is a public information. It is public. Anyone can know. There is no leaking of information. And this is what I want to say. What I want to say to Pierre. Okay? So Pierre, understand that there is no leaking information, because leaking information, if it is good, if it is given to insiders, this will be illegal by the Security Exchange Commission. It means if someone knows and give the information to other people, this is illegal in United States of America. Okay, and these people can be taken to prison or something, because they do fraud things. They give information to some people and they don't give it to the public, because the public should know. But if there is a gap up or there is a gap down or the stock doesn't move, this is the traders who decide. It's not the news, because it is good, there is a gap up. Okay? So this is, you know, no one knows about all the things. So you should risk. If you want to stay, you should risk. Let's say another question. Let's say here. Alborz Sajidian. My girlfriend joined me and she likes your accent. Hi, how are you? You know, I was born in North Africa, in Algeria, so we study French and we study English and all this accent mixed up. So, so it's like a mixture of a lot of accents. That's why you see the accent which is different from. It's like the Indian when they speak English, or the Spanish, or even here in America. Whenever you go, you find an accent. In New York, they don't speak like in the South. They have another accent that sometimes you can't understand anything, although they have been born here. So when you were born, your parents gives you the accent. Even when you learn another language, because you weren't born here, you will have an accent. But if you are a immigrant, like when you are young, you will have this accent disappeared because you are too young. Like when you are 5 years or 10 years or 20 years. I have been studying linguistics, which is the study of languages. So I know a lot about these accents and a lot of stuff. Okay, like when you see Italian speak English, you know, or Indian or Russian or whatever, there is always an accent, which is very good. Okay, thank you very much, Alborz. But what is your nationality? Alborz Sajijian. I don't know which it looks to me like European or Russian or whatever. Okay. Hello, Minyapan. How are you? Yes, I am very fine. You always come late, Minyapan. You should come earlier, okay, to see everything. Minyapan said, "Sir, currently Dow Jones is doing big correction or." Oh, okay. I didn't speak about about Dow Jones, so I will explain right now. Let's give you an idea about the Dow Jones. Very quick. Since I am following Dow Jones for a long time. Now, the last day I made a video, it was here. So as you can see, this is the resistance line that I put before when the correction is going down. This is the support line. It means this is where the candlestick, it means the Dow Jones has stopped going down. It has been going up. We have a small correction. It has been going good for 3 days, but this week it was so bad. Now, if you ask me, what do you think? I don't think nothing, because the thing for me, if it's going and crosses this, it will be the beginning of big crash or beginning of big correction, because we have seen this correction and we have seen this correction. Just a minute. Someone is calling. So, as I told you, you can see for this, it stops here. In this day, which is 9 of February 2018, it has been going down. Then we have a small correction. Then it goes up. It's like a trend. But now it's going down for 4 days. From Tuesday to Friday. Now, what's my opinion? My opinion is we don't know until we see on next week. If next week the stock is going down or the Dow Jones is going down, okay? Now, when it's going down here in the support line, it's going down, it means that the correction can be a crash. Okay, but we are waiting. That's why I told you before that for me, I am waiting. I trade. It means I find stocks, I buy. So there is no problem with that. I put stop loss. Whatever it is good, it's good. If it is bad, it's bad. But if the market goes in the future above this resistance line, we understand that there is a new trend. The trend can continue because it began. So here, it began here. It can continue. If it goes here, this trend can continue. Now, the problem is that if the market continue down and crosses, it should be what? It should be the continuation of this correction, because this was a small correction. All what is gained in January, okay, if you see here this day, oh, it's not just January, it goes to let's say to 20 of November 2017. All this is lost. Was lost when the market has gone to this line here, which is the 9th of February. In just how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. 10 days kills from November 20. Okay? So December, January, and 20 days. It means 2 months and 20 days has been eaten by this small correction. Because when there is a small correction, there is a lot of short sellers. They go and they short sell. Now you ask me my opinion, so you should be waiting for in the future, next week or the other week, until we get from this trending into a range. This is the resistance line, this is the support line for now. So we are waiting which one is good. Okay? So for this you should be just waiting. We will never know. Okay? I don't tell you that the market will be going down or going up, because I don't know. For me, I see the price and then I will tell you. But if the market goes above this, okay, I have been waiting for Apple, for example. See here, I have been waiting for Apple because Apple is belong to the Dow Jones. It touches the resistance line and goes down. Okay, but Friday it was going good. So for me, Apple, if it goes above, it means it will make the Dow Jones go up, and it might be going good because Apple is doing good, but the other stocks in the Dow Jones are not doing good. Okay, so Apple alone cannot push the Dow Jones all to go up, so it needs other stocks to come and to help him, to help Apple as a person. Okay, to get all this stuff going up. Okay, so let's go to other questions. Let's go to drink some coffee. So I think I have answered the mini question. The second question from James: what do you think when trading is halted on a stock you own? Now, James Armstrong, what do you mean by trading is halted? What do you mean? It means that trading in one stock is stopped? Why it is stopped? So I have no idea. Are you speaking about day trading? We say the trading is halted on a stock you own. So I don't understand what you mean. So can you please, James, can you please explain more? What do you mean? Are you speaking about the exchange stops stop a stock from going up or down? It means the price. This will never happen. It can happen with seconds, but it will never happen with hours or something. Another question from Wise Man. He say, is $1 million too much money to put toward swing trading only? No, it's not. Whatever you have, you can put, because there are some stocks. Some stocks are so big, and there are some people who have millions of dollars. And you see, if you go to see the bid and the ask about Facebook, for example, you can see how much money is traded. Understand that Facebook, for example, if it is $180 or 178, there are some people who buys, let's say, 5,000 shares or 10,000 shares or 20,000 shares. You see that in the bid and ask. It means these people are buying millions of dollars, not just 1 million. 1 million. When we say 1 million, because the people, they think that 1 million is too much, because he has never seen 1 million. So that's why the public, when you speak about 1 million, it's too much. But for Trump, for example, when his father gives him 1 million, he said it's just little money. Yes, it's little money compared to his father's money. 1 million is nothing. He give it to him. He say, okay, just go and play with this 1 million. So for someone who has never seen a lot of money, 1 million is too big. Okay. Trump said, do you like biotechnology IPOs when they gap up? No. See, I have a strategy with gap ups. So Trump, I have strategy with gap ups. It means when they gap up. But for me, I want to be in the gap up. I don't want just to trade after that. Okay? But I can trade after that. But for me, I want to be in. Okay? To have money. So Kareem, I had a very close friend from Iraq. You remind me of him. Where are you from? Oh. Now, for me, I am not from Middle East. Iraq is in Middle East. I am from Algeria, which is North Africa. Yes. So Trump said ETF. You say ETF protect from the bad hit if the market will correct. 30% volume in the market is from ETF. Now you still, Trump, you still speak about volume. What is the relation of volume with ETF? It has nothing. It has no. I don't trade volume. You spoke about in the beginning. You say 30% of volume is in the market is from ETF. Now these calculations I don't use, and it means for me nothing. So I don't use volume. Either the volume is so good or it's so bad. Okay, so I have no idea about this. Okay, so this is just okay, so okay, so as I told you, let's see what's this thing. Okay, let's go and continue. Juan Diaz, he says you gotta be a good touter. Oh, okay. People, they come here because they follow me and my explanations. So Juan Diaz, if you are here, either you are following me to understand something in the market. If you are not, you are just wasting your time. It means you are just coming to a live thing and you are doing nothing. So Artkov, he said, hello Karim. Hello. You come late today, Artkov. You always come in the early time, but it's 1 hour 45, but it's okay. Let's see another thing. So Chris Johnson, how are you, Wisconsin? Johnson, you have come late also for today. Hi Karim, need some help. What happens to SVXY? I lost 90% of your portfolio. That is too bad. That is too bad, Chris Johnson. Let's see what is this SVXY. Oh, I see where you are. I see. It was 139 in the past. Now it is 12. Oh man. I am sorry, Johnson. I am sorry. You have done. So why do you go to this future thing? I don't understand. But very sorry. See SVXY, as you can see. This is an ETF, but look here, it's futures. Okay? You don't go to a normal ETF, which is the index, shorting for example, shorting the whole market, as I teach, is not like these. Okay, these are futures. So these short-term VIX short-term futures are having something related to futures. So it was here 139, now it is 12. And another thing, I am sorry to hear about this, but Chris Johnson, it means Chris Johnson. Okay, Chris Johnson, please send me an email, because this subject is not related to what we do. So please, Chris, send me an email. We can discuss this, because it's a very private subject. Send me an email and we can discuss in this, because you said your stop loss is at 70. Okay, your stop loss at 70. No, you can. From 70 it goes to 12. No, you can't. This is just a general idea, because okay. So Chris Johnson, when there is a gap down, the broker has no relation with your trade. This is in general, okay? This is in general. So please, Chris Johnson, send me an email and we can discuss this in private. Albor's suggestion say, I always buy deep in the money call options with 6 to 12 months expiration instead of stocks themselves. They are safe and I can control more shares. Are you against it? Now you say are more safe. What do you mean by safe? There is no, just an example. There is no safe in thing. First, when you buy 6 to 8 months, you are buying a lot of time. Now, if you are correct with the trend, okay, so you are buying a premium of 6 months to 12 months time. So I will just give you an example to understand this from the explanation. Okay, for those who don't know options, okay. Now, for example, options, if you buy call, okay, let's say you buy here, you buy from now to, let's say here, let's say, as he said, 6 months or let's say 12 months. It is 1 year. Okay. 1 year. So you are not just buying the option called strike. Okay. Strike. You are buying all this, which is time. You are buying time. Okay. You are buying time to stay. This is what we call the premium with your now. Here is the thing. Let's say you put just an example, okay? Let's say you put $10,000, 10K. Okay? Now 10K, you will see that you have time with the premium that you buy and your money. Now, this depends on the market. If the market is going up, you will be making money here. It could be, let's say, 12,000. Let's say it is $15,000. Let's say you make 50% of your money after 1 year. But think the opposite. If it's going down, you are not losing. You can lose 90% of your money because the calculations are different. Understand that the calculations, how do they calculate the options? If you are not with the trend, if you are against the trend, the money will go so quick. Your money is going so quick and the time stays. Okay? So understand that it is not that the options is different. So this options is so different. It depends on the trend. But if you buy stocks, when you buy stocks, it will be different from the option calls. Okay? Now, if you buy this 10,000 in stocks, you can make 50%, but you can't just go and do 90% if this stock goes down. So understand options calculations are different from stocks. So my idea is be careful, because one time you put all your money and after 1 year you will lose all your money. And this is what I say to you, that options is risky. Okay? So okay? So understand. And when you say they are safe, there is no safe thing, and you are doing with options. Understand that options, when the options is going down, it will be quicker and faster than the stock. So it's a product of Wall Street. If you don't know what you are doing, believe me, you will be having a big loss because you are doing something too bad. Okay, so options is for advanced students who understand little bit the calculations. Okay, so don't put too much money and then you end up losing all your money at the end of the year. And for me, I'm not going to do options, because options, when it is a big position and the market is against you, they will eat you. Okay, the market will eat you because the calculations are different. So you should understand that. So James Armstrong say, what are considered good or reasonable prices for commission fees? Now, commission fees are from, it depends. A flat rate right now, most of the flat rate is $4.95, but it depends. Some they give you to buy by share, and it is more cheaper if you are buying big stocks. For example, if you there are some, we'll just give you an idea. Let me give you an idea about this. So some let's say commissions, just to have an idea about for this. There are two kinds. There is what we call flat commission. Right now, most of the time it's $4.95. Most of the brokers are $4.95. Okay, but you can find 6, you can find 7, you can find 10. Depends. Now there is one which you buy by share. They share. It is, for example, 0.45 cents if you buy, let's say, 100 shares. Now, if you are buying big stocks like $50 or $100 or $200, it's better to use this broker, which gives you, because you spend less. Let's say you buy 200 shares and they ask you only $1 commission. It's better that you pay $4.95. Now, if you are buying penny stocks, it's better to have commission $4.95 better, because if you buy 10,000 shares, or let's say you buy 10,000 shares of a stock, okay, so this you end up paying $9 or $10 or $12 in this one. So be careful of commissions. Now you should see the broker, what does it offer. But for me, $4.95 is the average. Right now. I know a broker that has $2.50, but the execution is too bad. So even if you take this one, the execution is too bad. It will be bad for you. Okay. Now let's go and answer other questions. Jerp Pin said, thoughts on USRM. USRM. Let's see this here. Hey man, see what's this stock? This here we have a pump and dump scheme. The stock goes from 0.003, it goes until 0.17. Okay, so there is a pump and dump scheme. So I don't do like this kind of stocks. Okay, I don't do like this kind of stocks. This a big gambling here. So so if you if you are going to do this kind of, you are following very, very small stocks, and for us here, we don't trade. I can trade $1, $5, $6, but I don't go and trade these cents. Yeah, it's a bit gambling. Okay, you can put some money if there is a pump and dump scheme, you can make money, but if not, it can go down and you lose more money. So Trump said, how to know the company's percentage of market share in that industry. You can compare companies to themselves, to other things, but I have no idea about the market share in the industry. Okay, so because the companies are doing different things, although they are in the same industry, but they are doing a lot of different things. A big company has more services, more products than small company. Okay, so you can find a company that has a big share in one thing, but the other shares are not good thing. So for me, I have never followed this market share or something. Never. Hello, Rahmatullah. How are you? You are late today. You didn't come on time. How are you? Albor said, you have tested your method since 2011, but it has been a full market ever since. Do you think your way works in a bear market like 2007, 2009? So, how can you test a strategy when we have thousands of stocks? Okay? You don't put a strategy in 1 year and you see it, because there are some stocks that go up. That is the market. So for us, we do shorting the whole market. We do selling short. You can buy even puts if the market is bad, and we can make money. So my strategies is for every market. There are many strategies that I use. It's not only one strategy. Okay? So understand that. So it is not one strategy, it is many strategies. I have how to short the whole market, or selling short, or buying puts. These three things we use when the market is too bad and everything is going down. But still, even if everything is going down, there are some stocks that go up. So it's very hard where you test it, because there are thousands and thousands of stocks. Okay, so my strategy is not trading software. So this is just to make sure. Okay, and you said you have tested your method since 2009, but it has been a bull market ever since. Now it has nothing to do with bull market, because sometimes you buy, let's say Twitter. Twitter was $74, now it is $32, for example. Has it been going down or up? It has been going down, although the market is up. So don't think about the whole market. Think about the given stock. So stocks are different of what you think. James Armstrong says, what do you think of him X? Let's say this him X. Nah. It's too bad stock. I would never buy this. Stupid. It's there is no trend that I can follow. Okay, I follow most of the time. I follow trends. Okay, so I don't follow stocks that have no trend. Hello, Brian Loveless. How are you? I haven't seen you since last time. You have been coming late. Oh, Rahmatullah, you were working? Okay, no problem. Alberts, do you follow the VIX, the market fear gauge, or to get a sense of what's about to happen? Now, do you think that this VIX tells you what is good for tomorrow? Who tells you this? If the VIX tells you what is in tomorrow, okay, we can just follow the VIX and we make money. But it is not the VIX that makes the money. What makes the money is the stock itself if there is a trend, either up or down. Okay? So stop looking at things. You know, the analysts, they just look at whatever in the market and they try to predict the market. For us, we don't predict the market. And this is, you should understand very well. I don't predict. When I buy a stock, I buy it on a signal. I don't tell you that tomorrow the market will be good or bad. If I buy before the earnings, I will not tell you that the market tomorrow will be gap up or gap down. I can't know. Because I can't control the people. The people are foolish. The market is illogical. So you should just follow the price and see what goes. So Alberts said, what do you mean by shorting the whole market? I don't understand. Now, shorting the whole market, you should short the ETFs, the indexes. Okay? So if you, I have shorted the indexes beginning of February, and I have made some money, but when the market goes up again, I exit the trades. So if you are interested, you can check check training level 18. It is called How to Short the Whole Market. You can check it. Maybe you get interested and you can study this training. If the market is going very good, very bad, you can use this in order to make money. You can short the sectors in major indexes, industries. You can short a lot of stuff. Okay, so this is for you guys if you are interested. But okay, you can check that. Training level 18, how to short the whole market. You can, and it's very easy. You just follow the training. It's very easy training. It will show you what to do, when to short, and it is not selling short. Okay, it is not selling short because you don't sell shares, but it is just something that do the opposite of the market. Hope so Albors, did you get my answer? And they say, when you find the stocks using your criteria, on average, how often they hit the stop loss and how often you can make profit. These probabilities you will never know. That's why there is no probability. There is no, how can you tell? Because this percentage that you are speaking about is false. Because when you say on average, it depends when you are. Okay? It depends when you are. For example, for me, I buy 10 stocks. You buy 10 stocks at the same time, but they are different stocks. I can make money, you can lose money. So it depends where you are in the market. So my strategies works with probabilities that is explained in training level 5. How to make money from stocks. Training level 5, if you go to it, it explains to you what is the probabilities I'm using and how I can make money consistently in my trading account. You are not going to make money from each trade, but you are making the whole account. You will be making money, but not in each trade. And this is probabilities that I use. So how often do you make a profit or do you make a loss? This has nothing to do with my strategy. My strategies is based on probabilities, okay? And how you trade, and where are you in the market? And if the market is going down, the whole market going down, you go against it, you lose. So you should understand the thing. Thank you very much, Albors. Brian Lovelace said, Kareem, do you have videos on how to set the stop loss? Yes. It's training level 6. How? I will show you. Just give me one time. Okay. If you go to my website, if you are looking for training level 6, here is, for example, my training. So it is this one here, how to calculate the stop loss, the most effective ways and strategies to protect your trades. This is the training that you should take in order to understand how to calculate the stop loss. Okay? Or you can, if you don't want to see the covers of the ebooks or of the videos, you can go training by videos here, and you can go to a training level 6, how to protect your trades using stop loss. Now, for you guys who are interested in how to short the whole market, it is 18. Okay, 18. If you go down, here is how to short the whole market, which is training level 18. If you click on that, you will get the training by videos on how to short the whole market. Okay, and okay, Albors, do you have any subscription that lets me access all the training levels? The gold one only allows me to the first. Yes. Now, why I do that, Albors? Because most of the people, you need the basics. The other stuff is for advanced students. And the people, they can't buy everything. If I put it, for example, for all, and I put, for example, $100, most of the people, they don't like it and they don't like to have it. So, Albors, you can take training level, you can take the golden subscription, and whatever you are interested in, without buying, you can ask me questions and I can make videos for you if you don't want to order that training. But when you order training, it will be for you forever, because it is in Gumroad website, and you always go to watch it. But subscription is, if you stop your subscription, everything will go. You pay just for 1 month, you stay 1 month, and then after the second month, you will see nothing. That's why some people, they like to order training, and since they are from 11 to 20, they are for advanced students. For example, why you should buy options if you don't want to trade it, or if you don't want to sell short because you think it's very dangerous for you and you don't understand or you don't like it. So you shouldn't buy it, and I shouldn't oblige you to buy this. But the 10 first training are the basics. You should have them all to understand my strategies, because there are a lot of things, not just how to buy the stock or to put stop loss, to follow the trend, how to manage your account, what are the exceptions of the rules that I have, penny stocks if you want to trade them. All this is in a golden subscription. Okay. Brian Loveless said, what do you think about W Bay? Let's see this W Bay. First, this WBA, it's an IPO. It means it is a new company. You see this one? You see those? These are short sellers playing here. They play here, they play here, they play here. This, if you buy here, it could be going down the same as this one and this one. So you buy at 18, tomorrow you will find that you are at $8. So maybe you lose half of your money. So be careful of this kind of stocks. These kind of stocks I will not buy because there is no trend. Okay? See, for example, let's say Apple. Okay, in Apple you see there is a trend. There is a very, very long trend. If you bought here, for example, at $92 and it goes to 76, so this is the trend. Now for me, I am following trends like these. I am following the big money. You see that there is a trend and the stock is going up. Now WBA, if you see the difference, see this difference? See this difference? So you see the difference? I am not looking for this kind of stocks because it doesn't help me make money. I just begin to make money and then we have this gap down and these short sellers, I lose a lot of money. So I don't play with these stocks. So that's why you understand I am always doing stocks that are good things. Another thing you say, and TWLO. Okay. So the stock was, before it was $70. Now it is 37. Now these stocks, it's an IPO. It means it is a new company. Now if this happened the same as Twitter, you see this stock goes to 70 and Twitter has gone to 74. So if you see this TWLO and you see Twitter, you will find that they have the same, maybe the same thing. Twitter, but Twitter, you know, it's a long time. Let's say we do weekly. Yes. Okay. So Twitter was going up until 74. Okay. 43. And then it's going down to 33 right now. So you see, it's the same thing. So it depends on the it depends on the future. Okay, it depends on the future. If this company is making money and the analysts change their opinion, it might have an uptrend. Okay, but if the analysts were against it, the stock will collapse, and it's always the same thing. Okay, so Buy-in 8 said, in a market crash, everybody is trying to sell. Somebody must be buying. Why is there some people buying in a market crash? Okay. Now, why is there some people buying in a market crash? First, buying, your question is so good. It means it explains a lot of things. So you say, why is there some people buying in a market crash? Now let's give you an explanation. Okay. Now here is the trend, and it stops. The trend stops. The down stops. Then it's going up. Then it's going down. This is the Dow Jones. I will just give you how it works. Now, when the market is going down, some people think it's a time to buy. There is no market crash right now. There is a correction, but no people know that there is a crash. Then the market will be going down and then it will be going up. Some people say it's an opportunity to buy. They buy here, they buy here, they buy here, they buy here. But there are other things. Day traders also, they sell short and they buy back. So they are doing the opposite. So, for example, they are selling short for the market, and then they should buy back. They must do it. They must. Because let's say they sell short. You sell short a stock at $20 and you think it's going to $15. Now, if it is true, here you sell. When it is 15, you buy it back. You buy. So you are obliged to buy. So that's why the people, they buy back shares to give it back to the broker. This is selling short. And there are day traders, they always buy and sell. Day traders, each one has an opinion about the market. Okay? Some people think that the market is going down, they sell. Some people think that the market is going up, they buy and they wait. So no one knows. But later after 1 year, you see that there is a crash. But later, when it is all done. But this short sellers, they still buy and buy back, and they still sell short. Okay? So there is a crash or there is no crash, so people always buy and sell. So it is a very complicated thing that you should understand. Okay. Albor said, what's the name of the software you are using to watch stocks? Ah, yes. Okay. Let's see. I give you. This is a free. This is a free. Okay. So it's called the free stock charts. Okay. Let's I give you the thing just to see. I'll give you the link, because there is a free training you can get. So give me a minute. Just a minute. So training list. Okay, so I give you two things: the free training for the free training for the chart, and the free training that that it is for my you can check that, please. Okay, so you can see there is a free training here, and there is a free chart training. So let's see here, because it is mixed, it shouldn't be mixed. And the chart is called a free stock chart. So I will give you just there is a free version that we are using, and please get it here. Thank you. Here, okay, it's called there is error with this chart. I don't know why this error is coming to this chart, so I have no idea what's the problem. So Albors, try to check this. The free training, the first free training is for my 20 trainings, is for free. You can get it for free. And there is a training for this software. It's just a chart, which is one of the best charts that I have ever seen. I use it since 2010. I plan my trades always there. Okay, so if you want to get trained in this chart, it's very easy. You just get my training, and it's just very easy, and it's very for free. And it works only in Internet Explorer. Okay, it doesn't work with other browsers. So you should use Internet Explorer to work, and you can use it because there is streaming data. So you can see the price going up and down as normal as it is. So it's excellent. It's one of the best thing you can ever have. Okay. There is a question. So there is a question by, let's see here, Pedro Neves. How come you don't swing trade on crypto market? So I am not related to crypto market, because most of the people who do, it's like forex, currency pairs. Okay? And I don't understand who is behind cryptocurrencies. So you understand? These cryptocurrencies can go up very quick, go down very quick, but no one knows why. In stock market, I know why things happen. But in the market, like in the cryptocurrency or in futures, you should just, it's better to use day trading. Okay, day trading is better, in forex and futures and the other stuff. For me, I don't, most of the time I don't do day trading. That's why I don't trade them. Okay, so but I have made Pedro, if you are interested, I have made a list of videos about Bitcoin. So you can go to my channel, okay, and you see, you put Bitcoin. If I find you the link, I will give it to you right now. You can just watch it, okay? If you just watch it and see if you like the information, okay? Maybe you get some information you like. Yes, I find you the link. I will send you the link right now. Okay. So I send you the link. I send you the link to and you will find a lot of information. If you are, for example, investing in Bitcoin or other stuff, it's just investing. You buy and you leave. If it goes up, you make money. If it goes down, you lose. This is investing, because no one knows who is behind Bitcoin and how it moves. For me, I can't put hundreds of thousands of dollars for something that I don't know how it works. It's a lot of risk. And for me, I work by risk tolerance. It means you should control risk. I put stop loss. I should know where I'm going. So these videos will help you a lot understand a lot of stuff. Okay. I have a small account. How best to spread around and make some money? Should I buy $10 up stocks or less? Now this is depending on you. Depend on you. Brian Loveless. It depend on how much money you have. If you have a small account, you can't buy Facebook or Apple or Google. You can't. So you are obliged. So it's you think. When you ask me the question, you think that you have a choice. You don't have a choice. You should go with lower stocks, but because when you say $10 or $10 up or less, depending on how much money you have. Because as I told you, you should divide your account into many positions. But if you have only $1,000, $2,000, you can't divide your account to many positions because you don't have money. You have just little money. So understand that. Yes, 5,000. I say 2 position or 3 position is the maximum. You can't go more than that. But you can trade any stock. But because for me, if you use my strategy, let's say training level 2, how to search for stocks. You can, for example, look for stocks that are under 10 only, from 10 to $1. You could find a bargain each day. And I showed in my subscription, or if you want to do the subscription, is better for you because you are new. You can do a subscription, like silver subscription, just for training for free, to see how to search penny stocks, how to search for IPOs, it means new companies, how to search for smaller price. Okay, so this is the best for you because you have smaller account. You can't buy bigger stocks. Even if you buy bigger stocks, you can't make money from them because they are big. They don't move that much. Don't buy, for example, 5 shares of Google. This will never help you make any money. Okay, but if you buy 200 shares of stock that it is $5 or $7, and it can go $2 or $3 or $4, you can make money from your account. But understand that smaller accounts, are always obstacle. So you say saving is very tough. Yes, I understand. But it is not saving, it is too tough. It is the job that you are doing which is tough. You should think to change the job to get more money. This is the problem. The problem is not saving. Your problem is that it is the job that you are doing. If you are doing a job that pays, let's say, $10 an hour or $12 an hour, you can't make it, because the job stops you from saving, from doing other stuff. Hello guys, there is a disconnection, I think, about the thing. So as I said to Brian Loveless, for you, all you guys, if you want to save money, the main thing is you look where you are in terms of jobs. So the best thing is to look for a good job first. Then when you have a good job, for example, why this what we call middle class? It means everybody who is a doctor or lawyer, or they can make a lot of money from the stock market because he can invest a lot of money and he has more money to invest if he is investing, okay, not having a lot of debts. But a lot of people, they put a lot of debts on themselves, okay. They can't save because their jobs, they are not good, and this is a problem in like in our life. So the main thing to do is to think seriously about what you are doing. Now, if you are paid not good, are you going to stay? Let's say you are 30 years or 25 years or 40 years. Think about this. Are you going to stay the whole life doing this job and with little money? So it's up to you. So it is your choice. It's not the job that keeps you from going elsewhere. It is you. And this is a very, very tough subject. Very tough subject. Albors says, I didn't know anything about the stop loss. I bought 40 call options of ENTC before earnings date on 26th January, and I made a 20k profit, but I didn't sell it until February when my 40,000 profit went to minus 4k. See, Alberts, I'm telling you something. Okay? Let's say if you bought 40 calls options, how much you bought this 40 call options? Let's say ANTC. Let's say we see this stock. So the stock looks good. So how can you? So let's see what you did. You say you bought 40 calls options of INTC before earning, dated on January. Ah, yes, I see. It was 40 and it goes to 45. Yes, but now it's 48. And you sold it. Yes. And you sold it until 9 February when my profits went to 4. But right now, you say can't see it, Kareem? What do you think they can see? It means, are you looking for the stock? This is the stock. So he bought it here on the, oh, what's, oh, this is the weekly. No, I'm sorry. I'm sorry. Yes, you bought it on 20, I think 25 January. At 45, it goes to 50. Here, you bought it here, and then it goes down, goes down, goes down. Okay, until you go with the downtrend, because the people, they short it, and you lose your options. What you get here, you lost it later, I guess, as you explained. Oh, you say INTC, or is it Intel? Okay. Yes, Intel. Yes. Intel, which is INTC. Okay. Intel is a very, very long, a very, very big company in electronics, and all computers we have the stuff. So, as I told you, Albors, you put 12K. Okay. This is because all your money, 12,000, is at risk 100%. What if we have a gap down? All your money will gone. Okay. So try not to do a gambling thing, because you are doing risky trades, and one time you will pay for it, and this is the problem. Okay, thank you very much. It means especially earnings. If you want to do that, do it with a little money. Okay, if you want to do risk, try to, even if you are doing options, try to divide your account into many positions and make small positions. If you get hit in one, you are not going to, but understand that options, I have training about options, training level 14, if you are interested to check it, but the risk is too much, and the calculation is different. It's not when the stock goes $1 up, you make $1 for the thing. No. Okay, no, you should, there are a lot of things you should see. Thank you very much, Alberts. But for me, options, it's so risky thing, so try to be careful. So Brian Lovely say, why is it that only 20 people watch you, Kareem? It's crazy. I think you're God sent. Oh, see, people, most of the time, they want ready-made, like stocks, just stock picks. They don't want to learn. That's why I am not interested in those people who don't want to learn. They are just want to they think to make money quickly, and because someone else knows. If you tell me, for example, if you buy a stock today and you tell me what do you think, if it is in my own criteria, I say it's a good stock. But if it is not my own criteria and I think it's bad, I just say you it's a bad stock. But I will never know what will happen in the future. And this is the thing. So most of the time, I don't care that much about people. About people, it means when we have a lot of people or not a lot of people. Okay, depends on what they are interested in and what's the thing they want to do. Okay, but all the people who take my training, it means they go deep into my training. They begin to discover a lot of things, because for me, I just open your eyes onto many things. I have seen that people, for example, they have long investments into banks, into brokers, but they have never seen what are the fees, what are the things. They don't question. And this is a big problem, because the bank or the broker can take a lot of money from you, but you don't understand, and you keep it for 10 years, 20 years, you lose a lot of money. Michael Martin said, I agree, Brian. I am glad to be one of the 20 learning this valuable material. Thank you very much for you guys. I always appreciate. It's just good to have a few people who want to learn something than to have thousands of people who are just coming for entertainment. It's the results, it's what you get that makes something which is very good or not. Okay, and for all the guys who are with me, like into like a subscription or something, I always try to give my best to explain. And they ask me questions, I make videos for them. So I always try to help as much as I can. But those people who want just, oh, give me some stock and I make money, it will not work with me. That's why those people, they go elsewhere, searching for their dream elsewhere. Okay? So thank you very much for watching. It was a very good session today. And hope to see you next Saturday, if God wills. And please watch the other videos that I post in YouTube. Sometimes I give notices, announcement and something. And just do what you can and follow the thing. Thank you very much. Rikoshi, where have you been? I haven't seen you for a long time. You have been hiding. Because I didn't see you doing anything. Thank you very much. Thank you, all of you guys. And see you next week. Thank you very much.